You need only one scalping strategy to be a profitable trader for the rest of your life. You need a strategy that is not complex, that you can learn fast and execute flawlessly. If the sole purpose of scalping is earning money, why would you even try to engage in complicated strategies that will put your hard-earned money at risk? In this video, I will tell you where to find stocks suitable for scalping. Believe me, they are not any stocks, and they are not the stocks that you have been trying to scalp, losing money constantly. I will also tell you when to enter the market, when to exit, which days of the week and what time of the day are best for scalping, what kind of capital you need to earn a sizable income per month, where you will place your stop loss, and how many shares of a stock you might buy at a time or in a session. If you follow the scalping instructions provided in this video, you will not place even one trade without purpose. You will not depend on guesswork or hope anymore. Let's get started. Successful scalping must start with choosing the right stocks for trading. You will not trade any stock but the highest gainers of the day. Your target stocks must rise at least 20% in the pre-market. They must have a 500% increase in their volume. They may have a valid catalyst behind the spike, like bumper earnings, business deals, FDA approval, or powerful endorsements like roaring kitties. But catalysts are not important, since you will depend on pure price action. They should not have a float of more than 10 million shares. Float is the number of shares available to the public for trading. The lower the float, the more volatile a stock can be. They should ideally be priced from $1 to $10, but never cross the $20 price mark. Why under $10? Because they offer you the highest profit opportunity. They should not have more than a 5-cent spread. The bigger the spread, the higher the chance the stock hits your stop loss before offering you a profit. If you have not looked at the spread, you have just entered a losing deal. But what is most important is that your ideal stocks must offer you an opportunity to make double the amount you risk. The stocks must be volatile enough to provide you with 20 cents if you risk 10 cents per share. They must be able to jump 40 cents before hitting your stop loss to offer you 20 cents per share. If you do not see that potential, don't even think of scalping them. Stay on the side, looking for a better stock. How are you going to find such a stock? You need to use a stock scanner. This is something most platforms come with. If your trading platform does not offer real-time quotes but only snap quotes, you need to subscribe to a data package. It may cost you a few dollars every month. But believe me when I say you cannot expect to be a profitable trader if you do not have the minimum tools to be a profitable trader. You cannot expect to be successful without making a meaningful effort to be successful. You may still not be successful even if you have every tool you need at your fingertip. Imagine what can happen if you do not have the tools you require. Having access to a stock scanner is that important. Now that you know what stocks to choose, let me tell you how exactly you will scalp them. You will be a bull flag scalper. What does that mean? You will wait for a short downward consolidation in the stock, which may continue for 3 to 15 minutes before the stock rises sharply again. If you are a new scalper, you will trade on a 5-minute candle. In that case, you may see 2-3 red candles before the stock moves up again. If you are an experienced trader who can execute your trades fast, you may use a 1-minute chart. In that case, you may see several bearish candles before the stock offers you the right entry point. The entry point will be above the breakout green candle. It is very easy to identify the breakout candle because it will generally be longer than the last red candle within the flag, and it will raise its head outside the flag structure. The breakout may be fake. Sometimes it is. The stock retreats to the consolidation zone, never to rise again. You are hunting for money. You cannot give the market any chance to fool you. That is why you wait for the second candle to overtake the tip of the breakout candle before buying the stock. Right at that moment, you have two things to consider. Number one, where you will put your stop loss. Number two, where you will put your profit target. Let's talk about the stop loss first. Your stop loss will be at the bottom of the bull flag, below the swing low, provided the flag is not very high or not more than 10-15 cents deep, which is the maximum you can risk. But you can tighten the stop loss a bit further by placing it below the entry candle, provided the stock retreats below the tip of the breakout candle before overpowering it. You must risk something to minimize your losses, but the smaller the loss, the better. Based on the situation, you will decide which stop loss applies to your trade. Now, where to put your profit target. Ideally, your profit target should be twice the money you risk, but that is an amount for reference only. Your ideal stock may grow as much as the pole holding the flag. That means after consolidation, you may expect your stock to grow as much as it has grown before the consolidation. However, you may exit the market earlier than that if you notice signs of fatigue or weakness in the stock. We will discuss that a little later. At this moment, you may ask why the price of a stock goes up after the bull flag breakout, or why this strategy is the most profitable scalping strategy of all time. These questions may sound different, but they are not. It is the greatest strategy because prices go up after the breakout, and since the price goes up, it becomes a profitable strategy. Once the breakout happens, every scalper jumps into the stock, including the ones trading millions of shares every day to get a share of the pie. There is a race among scalpers at that moment to buy as many shares as possible and as quickly as possible, which pushes the price of the stock sharply higher. The second reason is, of course, related to another set of scalpers named short sellers. These scalpers shorted the stock at a higher price, pushing its price down. Now, they must close their positions in it as quickly as possible to realize as much profit as possible or to limit their losses as much as possible. All these actions take place the moment the flag pattern is broken, and as a trader, you only become a part of the ongoing action to realize your scalping ambition. But how many shares will you buy when it is time to buy? How big or small will be your position size? 1,000, 5,000, 10,000, or more? I would say it depends. Your account may be small. You may be a conservative scalper. You may be a hesitant scalper, someone who has no or little knowledge of scalping. That is okay. You can start small and scale it out little by little. However, according to the data we have seen, you can make the highest amount of profit when you trade 5,000 or more shares in a trade. If you target stocks around $2, you don't need a lot of money to buy that many shares. After all, scalping has to replace your other incomes sooner or later, if you are a serious scalper and want scalping to be your career. If you trade 200 shares, for example, you will not make enough profit, even if the stocks rise following the flag pattern. Scalping cannot and will not receive your full concentration. It will not be your career. However, based on how much money you want to risk per day or per trade, you may adjust the number of shares per trade. If you believe you are ready to risk $500 per day, you may split the amount into 5, risking $100 per trade. That way, you still have a profit target of $1,500 per day, and you need only a 30% win rate in a given month to break even. But your target should not be 50-50. You should aim for more. Bull flag pattern offers you high probability setups. As we have seen, you can win 65 to 70% of your trades by using this setup. That is a very healthy win rate if you ask professionals. Don't be fooled by those who guarantee that their strategies come with an 80% or 90% win rate. There is nothing like that in the world of scalping. They are not professionals. They want to sell something to you. They will ruin your trading career. Understand that if you do not have even $5,000 in your trading account, you can still be a profitable scalper. As a scalper, you will hold a stock for about 5 minutes. You are not a swing trader. You are not even a traditional day trader. You are a scalper. You enter the market quickly and exit it fast with a small profit. You will not hold your positions for hours. Because of that, you can recycle your money a few times every day to squeeze out the best from it. If you trade 1,000 shares at a time and recycle your money at least 5 times, you will hit your daily target of trading 5,000 shares. As you start taking profits, you will surely be able to engage more capital in scalping soon to make even more profit. Finally, according to our research, your best scalping days are Tuesday, Wednesday, and Thursday. You will make your maximum profit during these 3 days. Between Monday and Friday, your choice is Monday for scalping because there is not much action in the market on Fridays. Traders who have made money have closed their shop by Thursday. They do not want to give away their profit by overtrading. On the other hand, traders who have lost money trading have already risked their maximum amount for the week. They have closed their shop too, as they don't want to lose more. As a professional scalper, you too should close your shop by Thursday. Believe me, if you cannot become a profitable scalper by trading the first 4 days of the week, it is very likely that you will not be a profitable scalper by trading on Friday. On the contrary, you may make the situation more difficult for yourself by losing more trades and more capital. Take a break and start again the following week. Relax during the weekend, read a book, take a walk by yourself, and try to find out what went wrong, what caused the loss. You should not be surprised to see 10 consecutive losses in scalping. But every time you lose a trade, believe that you are one step closer to winning a trade. Say to yourself that you cannot fail as a scalper, that this is the only option you have to be successful in life. You may stumble, your mind may be clouded by despair for losing money, you may not be able to sleep night after night, and you may even feel very lonely since you cannot share your experience with anyone. But deep down in your heart, you know that scalping or trading will be all under your control one day. Scalping is a battle against the forces of the market. You don't have even more than a 5% chance of winning over it. But, as Elon Musk says, while explaining why he decided to invest all his millions in Tesla and SpaceX, if you have a 5% chance of winning a battle larger than life, it is worth fighting it. And if you have not tried to become a successful scalper at least 11 times, you have not tried enough. But things do not need to go that far. If you have 3 consecutive losses, you should pause trading, look at your setup, look at the pattern closely, and look at the stock before placing your 4th trade. I may even suspend trading for the rest of the week. You need only 1 good week per month to make all the money you expect to earn from scalping. Every trade is a possible loser, but if you stick to the plan, you will win ultimately. Every scalper loses trades. Don't be angry. Don't revenge trade. It is not your fault or the strategy's fault. There are more variables at work than you can imagine that impact the price of a stock. As a scalper, you can only control your response to the market. You cannot change or influence the market with your limited capacity. Even during the 3 weekdays of your choice, Tuesday through Thursday, your scalping hours should ideally be limited to the first 2 hours of the trading session. You heard it right. Trade up to 11:30 a.m. as price action slows down after that, unless a new announcement or catalyst is impacting a stock. You will notice that green candles start becoming smaller and smaller after that. Stocks start trading sideways, and even if there is a bull flag, the breakout from it does not rise as sharply as before. You may not expect a profit double your risk from the price action. It is better for you to stay on the side for the rest of the session. Always remember, as long as you have capital in your trading account, you will earn money in the long run. It is so much better than trading in an uncertain market and losing a part or all of your capital.